Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with a weekly stock market analysis for the week of December the 9th, 2019. We're calling this week's video 9 to 5 as this past Friday the US released its economic jobs report, which caused a huge reversal in the overall market with the highest movement of price across the board in all indices that we've seen in over a month, showcasing that the market is still very, very bullish despite the uncertainty and the back and forth between US and China relations. On the front side of the week, we saw a significant sell-off that we'll dig into in just a minute, but wanted to kind of highlight that the market is still very, very sensitive around US-China economic sanctions, as well as moving forward with trying to close out on our overall China deal. The US president announced that we are not necessarily as close to where we thought we were for a deal, and we saw a significant sell-off both Monday and Tuesday, but toward the latter part of the week, really driven by a 50-year unemployment rate and the overall economic indicators that were positioned in regards to wages and overall job gains, pushed the market just short of all-time highs across the board. So we'll jump right in. Well, we've done a little bit differently here. We've changed the colors a little bit, so please let me know if this is a little bit easier for you to consume and receive. At the same time, still trying to give you the same amount of information, if not much, much greater going into 2020. So we'll start out this week with a 3-year weekly chart where we can really see where we've gone and where we potentially could be going. What we do want to kind of highlight is this longer term trend line that was just touched almost to the tick in this past week's sell-off, but did not actually breach it, which just does show us that the bulls are still in very, very much control. So we'll highlight this trend line here, and we can see almost exactly the sell-off coming right into our 9-week moving average and just touching that and doing a reversal upward. So this does showcase, at least in the short term, that the bulls are still in very, very much control and are looking to try to test just that much higher. Now, one thing as we zoom in a little bit more so on the next slide for our closer 1-year weekly chart, we can see that we did not breach our all-time high, which is very significant in regards to the amount of positive news that did come forth over this last week. We were not able to break the all-time high on the SPY at 315, just short of 50. And this could be a signal for us that this could be a blow-off top. We typically see aggressive moves right before a larger sell-off. Now, our hypothesis is we still are very, very bullish, but there is a possibility of a little bit of sideways momentum as we close out this month and the overall calendar year. We did see a pretty significant amount of volume this past week, which does showcase that some of the larger institutions were actively engaged in selling off to take a little bit of risk off the table, as we have been pulling much higher over the last 6 to 7 weeks and breaking out of this overall range this past week. Now, at the same time, we have highlighted that we have been in balance for majority of the last 2 months or so, that we just did see a nice breakout over the last few weeks. And we do anticipate that this range will be somewhat doubled as we kind of communicated out over last week's video. So there still is that opportunity for us to continue to breach this, but we do want to watch as we come in to the front side of this week if the bears see this pullback over the last few days. And we'll zoom in. We really don't trade off of the daily chart too much, but just want to kind of highlight a little bit more for you so you can kind of see what we're talking about, that we did see a little bit of sell-off as we closed out the week, and we did not breach that high with as much positive news that came out of the economic reports this week. It's a little bit telling for us that we weren't able to kind of breach this high. Now, that does not mean that we can't do it this upcoming week. However, it does showcase to us that there is a little bit of pause where new buyers are not necessarily stepping in at the highest of the high prices. We do see, if we jump right back to the weekly, coming back down where we felt that this 306, 305 level was inexpensive for the bulls to kind of step back in and look for a rebuy after the sell-off. So something we want to kind of take into consideration as we move on to the NASDAQ, which also saw something very, very similar this past week, is a pretty significant sell-off. Now in the weekly chart, we can see a pretty good sell-off coming down towards our 20-week moving average here, as well as butting right up into our value area high and reverse directly right back to that. Now, as we continue to see in this longer term chart, a pretty significant trend line that was breached. So we did anticipate a little bit more of a sell-off on the NASDAQ as this trend line was breached, but we did see buyers stepping in right at somewhat of a support level, roughly about the 195 level, a pretty round number, excuse me. At the same time, butting right up onto a moving average, which is a very visual reference. So this does indicate, at least on the NASDAQ, that there was a little bit of shorter term trading stepping in, or more intermediate term trading stepping in, to look at an opportunity to kind of buy. So again, I'll step into the daily chart where you can see it just a little bit clearer on how and exactly where we were able to kind of see the bull stepping in roughly about that 194 level and butts right up onto our 100-day moving average, which does align to our 20-week moving average. Again, we do want to kind of highlight very, very similarly on the SPY, where we have been in this longer term trading range, where we do anticipate some type of breakout looking longer term, and how this could be doubled if we just map it out and looking into these higher ranges. So we do see a target where we will look to begin to become a little bit more bearish, roughly about the $207, $208 amount. Now, as we close out both the quarter and the year in the half, we do anticipate a little bit of selling off, but we do also denote that this past week was very, very bullish, but we are a little bit cautious that we weren't able to breach these all-time highs. Now, conversely, if we switch over to the Russell, we did reach our 52-week highs, but we were still significantly further away from our all-time highs, which are roughly about $173 here. Now, we are very, very close to potentially doing another breakout, but we do anticipate that there will be some type of consolidation moving forward over the next few weeks in the Russell. Very, very strong momentum. But if we take a few steps back and do kind of a mathematical fib, we do see that we're butting right up into the 786 retracement and have begun to pull back just a little bit. So we have moved pretty aggressively off of our lows on the Russell, but we don't necessarily anticipate that as a continuation forward, but we will always adjust as appropriate. Now, we also want to kind of call our attention to a pretty significant breakout on the Russell that we've been monitoring over the last number of weeks and have been calling that we have been very, very bullish. Now, this past week, we did see this longer term trend line here breached, but at the same time, a quick reversal right back. Now, if we do jump over to one of our other charts that we always showcase from a value perspective, we did kind of call this as a look below and fail, where price did move back into the value area and look for an opportunity for a reversal. So the bulls did see, at least on the Russell, a pretty significant sell-off, but then also a very, very aggressive movement of volume and price to push us right back out to 52-week highs. So at the same time, if we dig in again from a daily perspective, you can kind of see where we have come. Excuse me, we'll jump onto daily on this chart. We do see pretty significant range. We do also want to bring some caution that we have reached some type of extension from value where sellers may begin to step in. And we did see toward the latter part of Friday afternoon a little bit of a sell-off. Clearly, from a chart perspective, all three indices are still very, very bullish, but we do want to begin to caution any new buyers. We still are at higher prices, toward the end of the year. Now, we are going to call that we will end the year or in the month very positive and in the quarter significantly positive, but we do also want to look for some opportunities to take some risk off the table, as there still is very much uncertainty, at least in the U.S. from a microeconomic and then broadly across the globe from a macroeconomic perspective, not only from consumer sentiment as we get some reports, not only from major retailers as well as tracking on a weekly basis our retail sales as we get closer to Christmas, but then also the U.S. Impeachment, which was announced this past week. As that begins to pick up, there could be some uncertainty that's seen within the market. So again, very aggressive, 9 to 5, wonderful movie from the 1980s if you haven't had an opportunity to take a look at it. We will close out this video showcasing how we will be coming to you in January with a number of new offerings. So I'm pretty excited to showcase some of the things at Carl A. Smith Holdings that we're going to present to you in 2020. So as always, it's your money and it should be under your control. Take care.